You've requested ICP, so here it is for you. But not only in this video am I going to cover internet computer and the technicals, I'm going to show you one simple trick that will give you an edge in the market and help you identify whether something's strong or whether something's weak, and you can use that to your advantage. But before we go over this game-changing, simple trading trick that I'm going to show you, and not only I'm going to show you, you're going to be able to do it by the end of this video, and you're going to understand it by the end of this video. You've asked me to analyze ICP, so that's what we're going to do first. So we tracked the breakout, it's broken out, it's come back, it's retested our trend. So that's a tick. We haven't fallen through here yet. We haven't fallen through the trend. We're holding the 20 moving average, as we'd said, and then we've got the 50 moving average as backup underneath it. So this allows for tight risk management, tight stop losses. You're wrong if price closes below $11.24. And what does that mean? Price is likely to come back down. Retest support sitting between $8 at the bottom end and $9.75. But more importantly, you've got your tight stop losses here, and you've got an allocation limit order set here. That means that you can obtain more allocation of ICP for the same amount of money by just this small loss here. So that's how you can prepare yourself for a loss. If we do hold as support, we're likely to go back and test the bear. The bear is sitting between $4.49 at the bottom end, $15.75 at the top end. So it's do or die time. The next couple of candles are going to tell us what kind of directional bias that we're going to get. But if we're forward looking, we can look at other markets to tell us whether we think ICP is going to run. And one of them is the Bitcoin dominance, which is holding a strong resistance level at the moment. It's not going to be the end of the world if this happens to the downside on the Bitcoin dominance, because that means people's coming out of Bitcoin onto more on-risk assets, such as ICP. We've got the total 3, that's sitting at a strong resistance band as well. And we want the opposite for ICP. We actually want a breakthrough, this to be support. This is the total crypto market, excluding Bitcoin and Ethereum. We want a breakthrough, this to act as support, and a move to the upside. That means that money's flooding out of stable coins, it's flooding out of Bitcoin, it's going into total 3. Total 3, excluding Bitcoin and Ethereum. So people are going on risk when this happens. And that's going to be something that's going to be forward looking. If we break and close above there, we're going to get a few weeks of risk on. So USDT dominance, we want the opposite for this, because this is the stablecoin tether. We want a move to the downside. So this has acted as resistance, and we've started a move to the downside. If we continue this move to the downside, people are selling the stablecoins, going into more on-risk crypto assets, again, things like ICP. And the DXY is actually at a resistance band as well. Again, same as the USDT dominance. We want the dollar to be weak. We want people to sell the dollar. We want the dollar to be weak. We want people to flood in on risk assets such as altcoins. So that's how you can look at markets to get forward-looking indicators. If this happens first, you can expect that the Bitcoin dominance and the total 3 will follow, and then you can get an indication as to where ICP is going to go going forward. Right, so that's the ICP analysis. That's what we're looking for, and here's what you're here for. This is a tutorial that's going to give you an edge by this one simple trick. And I promised you simplicity, so simplicity you're going to get. So let me know in the comments below if you found this useful, and if you did find that it give you an edge as to whether an asset is strong or weak or medium. So left-hand side, we've got a bullish trend. Right-hand side, we've got a bearish trend. The one simple tool that we're going to use, left-hand side, geometric shapes, it's the rectangle. This simple rectangle is going to be the thing that helps us identify whether something's strong or whether something's weak. So how do we apply it to the charts? In a bullish trend, you're making a series of higher highs, higher lows, higher highs, higher lows, higher highs. What we're doing is identifying whether something's weak or strong, and we're going to apply the rectangle to the previous swing high, to the previous swing low in a bullish trend. And what we're looking for is a high probability as to whether something's strong or whether something's weak. And this is how we can tell that. If price action comes back and tests this previous resistance, which is now expected to flip as support at the top of the rectangle, at the top of the previous swing high, that's showing that there's a high probability that this bullish trend's intact. There's a high probability we're going to continue to the upside. That gives you an edge because you know if your asset's strong, if your asset's weak. Now, if we pull back slightly further into this, it's showing that there's weakness. There's more weakness because the bears are pushing price halfway between the previous swing high and the previous swing low. Now, this is where things get interesting. This is where things really help you identify and give you an edge whether something's strong or weak. Because we know what we need for a bullish trend to be intact. We know we need that higher low that we got here. If price action comes back down and tests that higher low, that's as weak as it gets in a bullish uptrend. And one step further, if price closes below, we've created a lower low, you're expecting to come back, create a lower high. And what does this do? Showing that the trend's likely to reverse and continue to the downside. So this bear regained momentum at this level here. Couldn't create a higher high. We've come back down. We've created a lower low, and you're expecting a continuation to the downside. And this creates what's called a head and shoulders pattern. Head and shoulders is a reversal signal. The psychology behind it is you haven't continued and made the higher high, you've made the lower high, you come back down, you've retested your previous higher low, you broke your higher low, and the bears have regained momentum. The trend's not intact anymore, and we're expecting a reversal. So the same for the bears. Get your rectangle, and we're looking for the strength. How strong is this trend? If we come back down and test the bottom of this rectangle in this instance in a bearish trend, that's showing it's a strong bearish trend. Continuation to the downside is the highest probability. Again, medium and then weak. That's as weak as it gets. And if price closes below, we're expecting that. An inverse head and shoulders, which is a reversal pattern. Okay, now we're going to go over some real-time examples, starting off with the bearish trend. And what we're going to do is we're going to get our path tool. You'll find that in exactly the same places where you found your square, under geometric shapes. And what we're going to do is we're going to follow the trend down and identify whether it's weak or strong. So we're just connecting the dots. There's the lower low. There's the lower high. There's the lower low. We're in a bearish trend, remember, lower high. And what we're doing is we're just looking to identify when we can signal weakness in the trend. So we'll start off there. And what we're going to do is we'll bring up our rectangle. And remember, we're measuring from the swing low to the swing high. In this bearish example, swing low. There's the swing low. And we're looking to see how strong this trend is, this bearish trend. So we've come back down. We've come back up and we've tested the previous swing low here. And remember, we said that's as strong as it gets, a big move to the downside. So we rinse and repeat. Where's the swing low and where's the swing high? There's the swing high. There's the swing low. How weak is this? The bears have pushed price right back up nearly to the previous swing high before a continuation to the downside. We know that that's pushed right up near the top where that didn't manage to. So that's stronger. This is weaker. We can continue to the downside, rinse and repeat, and find out when we think something's changing. So we've put in a swing low. There's your swing high, swing low, swing high. Can we see if something's changed here? Measure the swing low to the swing high. You can see even weaker. The trend's come and tested right back to the top of this previous swing high, and then we're continuing. What's happening here? You can see you're stagnating, you're getting flatter. The bears are losing momentum and something is changing. We're creating a series of higher lows and higher highs. This is our resistance band. It hasn't completely reversed yet, but we know that something is changing. So we put our support band in there. There's your swing high, there's your swing low. Can we identify if the trend is going to change now? Because what we need, remember, we need this to come up, hold as support, continuation to the upside. The bears, in our previous example, push price below the previous higher low for a continuation. So we know something's changing. It hasn't quite reversed yet. The bulls haven't regained that momentum yet. So what we'll do is we'll create that on where current price action is now that we're bullish, and see how strong this trend is. We're making a series of higher highs, higher lows. So we're joining the dots with the rectangle from here to where price action is currently sitting. And we know that the bears have pulled 3/4 of the way into this previous support band. We can call this our kill zone. We can call it our area of interest, call it whatever you want. But just know the further in that you get, the weaker the trend actually is. Once you come back and test the higher low in a bullish trend, That's as weak as it gets. So we've currently got a reaction. What I'm going to do is I'm just going to add a Fibonacci on there. We'll go through Fibonacci in future lessons. If you want me to, let me know in the comments if you would like me to do so, because this is an additional thing that you can use. And the psychology behind it works similar to the actual rectangle. How much and how deep is the pullback? We've come back, we've tested the 786. We've got a reaction at the 786. The 786 is 78.6% of the previous move. So we've come back down, we've tested 78.6 of this previous swing high. We've had a reaction, price has come up. We've had a rejection at the 382. Is that going to be the lower high? Because this is going to be do or die. If this is a lower high, trend's likely to reverse, continue to the downside. However, if we create a new higher low, we can then monitor the pullback by adding in our square and seeing how deep it pulls back and how much probability we've got for a continuation to the upside. So it's just a simple trick that you can use, an additional thing that you can put in your tool bag to give you that additional edge, because all we're doing is valuing assets. Is something fair value? Is it not fair value? Is the trend intact? So if you want to see more tutorial videos, if you want to see Fibonacci videos, whatever it is, let me know in the comments and I'll go over it, because knowledge is your best asset. Subscribe to the channel if you did find it useful, and I'll see you in the next one.